All right. A lot of people are concerned about their financial futures, and that includes people who are very close to retirement. Joining us to discuss this is Chris Hogan, author of Everyday Millionaire, and also help us address how a crisis like COVID-19 can change people's plans for retirement. Chris, it's good to have you here. Thank you for joining us on Yahoo Finance.
Well, thank you.
I want to ask you, one thing you pointed out is that even if you're 1 year from retirement, there are opportunities for investment right now. So if you're 1 year from retirement, where are those opportunities?
Well, the opportunities will lie inside the market itself. I mean, right now we're dealing with unprecedented times. We've got high unemployment. We've got wild market swings as we wrestle with this pandemic. But people that are a year out from retiring, they're going to have to adjust their expectations. You know, some of them may move forward and take an early retirement. Others may move forward, take an early retirement, but also have to work a part-time job. But I'm also talking to people that are regrouping and changing their expectations. They're planning to work another year or two longer while they allow this market to be able to really correct and really continue to move forward.
Hey, Chris, it's Julie here. It's good to see you. So what happens if it doesn't? Or what happens if they're, say, not able to find additional work if they need it? Are you seeing also people sort of not take out little insurance, but what are the backup plans that you're either hearing about and or advising people on?
Yeah, and this is really real as people are really playing out those scenarios. But they're kind of walking through and looking and they're going, okay, what if it doesn't come back in 2020? And, you know, you can play these what if scenarios till you're blue in the face or until my hair grows, one or the two. But I'm advising people, let's control the controllables. And what I mean by that is looking at where you are, assessing your risk tolerance, looking at your asset allocation. Are there any changes that need to be made? But I'm warning people, do not make knee-jerk decisions without sitting down and talking to your investment professional, because then you would miss out on that rebound that is going to come. And here's the reality. We all know the market is going to come back. I mean, we can take a look at where we were in January and February, and just 45 days later, here where we are. And this is because of the pandemic. But we've walked through this with SARS. We've walked through this with Y2K. We walked with this in 9/11 and even the Great Recession in 07 and 09. And so we know it's going to come back, but it's these people that are in this retirement phase or close to it that are really having to adjust their game plan.
Hey, Chris, Brian Chung here. So a bit of an uncomfortable conversation, but some people who are particularly financially distressed might be considering needing to tap into their 401k or into their retirement plans to get funding now, to get financing now. I mean, if people are considering doing that, what's your advice? Is that something you would advise to do if you know, people need rainy day money?
No, great question. You know, I am literally trying to help people avoid tapping into their retirement as much as possible. I'm telling people the only two reasons I ever give people to tap into that is to avoid a foreclosure or to avoid a bankruptcy. But it needs to be a last-ditch measure. And I know with the CARES Act, they removed the penalty, but they didn't remove the taxes, and they haven't removed our need to grow money, right? I mean, we all know compound growth is how money grows, but inflation, it means the cost of living is going to go up. So I'm advising people to go into conserve mode, really take a look at where you are, what you're paying for, delete the subscriptions or the unnecessary, really be mindful of taking care of the things that are needed. I call it the four walls. That's your housing, your rent or your mortgage, the utilities surrounding that, food, and then keeping gas in your vehicle. But really kind of go into constraint mode. I've even advised people to take on part-time jobs before tapping into their 401k or 403b.
Chris, I'm curious, you talk about people still investing if they're working 15% of their income, but a lot of people have taken pay cuts.
Yes.
That's not unheard of, 25% for some people. Still put 15% in? I mean, it's much tighter under those circumstances.
Oh, it is a lot tighter. You're absolutely right, Adam. And in that constraint, if your income has been cut or your hours have been cut, you've got to take a hard look at where you are. 25% is a significant cut, but I still want people investing for the future. But here's what I've told some people. If your hours have been cut significantly or you've had a job loss, you can't attack debt or invest right now. Right now, what you're trying to do is stabilize your financial situation. So you would pause doing all of that right now until you've got your income more stable, then look at going back and investing.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.